What's up, everyone? Josh here from Nobel Trading. We got a slightly new setup. We've actually got a lot of new things that we've been going over. So I'm just doing an episode of Spacing Out, just kind of touch base. We're also doing a big announcement for Thanksgiving, so just be aware that that's occurring as well. Super pumped about that. I've been working on a lot of things in the background. Actually, I'm just going to leave that as is for this episode. I've been working on a lot of things for the Discord, but also for the company, doing a lot of stuff in the background. So hopefully going to do like a content drop like in sections after Thanksgiving, after we do the new announcement, because I've been doing stuff in the background and then also working on new social media strategies. And now we're on TikTok, and I made the first Reddit post, which I guess I don't know how that's going. I'm scared to look at the comments. But I did notice that the options video kind of jumped in views suddenly. So I imagine they'll rip me apart and have a bunch of mean comments to make. Is this actually plugged in? Am I screwing up right now? That is plugged in. Okay, sorry. And so, but that should be kind of funny, I guess. It's what it is. I also got my first hate follower today. Or, well, actually not today. That was last week. But that was exciting. I now have people that follow me just to write hateful things on everything I create, which is actually kind of awesome because getting consistent reactions or viewers is pretty ballin'. So I don't really care if it's positive or negative, to be very honest. So I just because the more attention it gets, the more chances I have to get content out that actually helps people. And I think some people are actually, I did read a few comments, and some people were saying that like the stuff in the Reddit wasn't helpful, but maybe maybe people should watch the video and that would be helpful. And if that's not helpful, then I built a whole educational Discord. So hopefully that's helpful. And if that's still not helpful, then we also have the contenders thing where you can see all my traits and all my research. So that should be helpful. And if that's still not helpful, you're probably never going to learn how to trade. So, yeah. Or you need a different mentor. I don't act like I'm the best mentor. I'm getting there, though. That's what the whole purposes of this is, right? I'm also, cleaning up some of my mastery as I create all this. And, I mean, even creating all this is, like, great reinforcement. Anyways, dwelled way too long on that. We just did, like, 2 minutes and 30 seconds of that. Let's recap the market. I haven't talked about the market. I haven't given, like, a nice, concise video like this to just kind of talk about what I think about what's going on in the market. Mostly because, like, today was so boring. I mean, there was a few stocks that were moving and grooving. I didn't feel like chasing anything. I just feel like we might be in a lull where, things are kind of moving, but they're just selling off. We're seeing some movements off different news. We actually saw a sell-off that I can't fully determine whether it was from Russian news about lining up troops to Ukraine or if it was just a reaction to Powell being renominated. I actually thought Powell being renominated would be a good thing because I don't think the market wants more dovish. You know what? I say that, and I feel like that's just not true. I feel politically people don't want a dovish Fed, but I feel like the markets do because they know that will mean more money printing. And I think Powell is actually a little bit more hawkish. By the way, when I say dovish and hawkish, this has to do with interest rates, right? A hawkish Fed person will be more likely to raise interest rates. A dovish saying Fed person is so not professional, but having a dovish head of the Federal Reserve means that they're more likely to continue to lower interest rates, be more likely to print more money and to solve things, to try and attempt to solve things with money printing, right? Because Powell's out here trying to solve everything, including racism, with money printing. Which, I mean, people have polarizing opinions about that. I mean, it just is what it is. I'm just looking at how the market reacts to things. And that's going to be the continued phase I kind of stay in right now. And how I've been is I'm being very reactive to some things. I'm actually, what I feel like we're kind of seeing with some of these earnings reports is more of like a returning to fundamentals on a lot of these stocks. People are getting a little bit worried. They're a little more anxious about stuff. So, we had that. I just posted that snow short, and that got like 115% on that. That just seemed like an obvious one. We also did the same thing with Upstart. It was just too overvalued. I set up the short. Currently shorting Rivian. Rivian's a weird one too. We've been talking about that in the Discord. I didn't expect that. I guess I should have expected some excitement, but the amount of excitement that stock got, I mean, they barely made any vehicles. And great tech or not, like, execution from a good management team matters more than anything else. And if that management team's already losing a lot of the deals they've set up, which is what led to that initial sell-off from that, I think, 170-ish high, that's not a good start. So I don't know the politics and what went to those being reversed, or maybe it had something to do with the way that the infrastructure deal was set up. Maybe for the government contract at least, or for the Ford pullback, which Ford is still invested in Rivian, which is odd to me as well. Usually if you see a company invest in another company, like a lot of these pharmaceutical companies are investing in psychedelic stocks because they're trying to basically hedge against themselves, because, you know, a lot of these companies that like make SRIs or antidepressants know that these psychedelic stocks are likely going to put them out of business over the next decade. So they invest in them as a hedge against themselves. When I see Ford invest in Rivian, I can't help but be like, is this a hedge? Is this what's going on here? Why aren't you making EVs? Why are you investing in another EV company? So it's an interesting move on their part, to be like, this company has such better tech than us that we're going to invest in them. But by the way, buy our stuff for sure, but we are going to buy theirs. So it just feels weird to me. Maybe that's not. I have nothing to like historically back that up or anything, except for the pharmaceutical example. Maybe that is commonplace in the auto industry. I don't know extensively to say whether or not that might be true. So that's been going on. That's just like individual company excitement. Tesla's been doing really well. Makes sense. They've kind of like win everything. We've talked about that before. Especially since they're kind of getting into the infrastructure. They want to start, making these bus-sized batteries for all the cities. That's cool. But what's not cool is if they can actually accomplish that with all these infrastructure issues that go with these clean energy and even now energy crisis. It's like a combo. I mean, it's related to one another for why these things are occurring, but either way, it's still very concerning because these are starting to ramp up a lot. And so with that incorporated, and you got to remember there's these massive oil issues, and countries like India are even digging into their emergency reserves. These emergency reserves, by the way, are set aside for war, because you need to use a lot of oil or utilize a lot of coal or a lot of those energy resources to power the war machine. I'm using that generically, not that there's like actual technology called a war machine. This is not Iron Man, but they need those massive oil reserves to get that going, and that's why they always keep some on reserve. Also to actually help the country, which they're doing now, but they're going to be really cautious to do that. Especially okay. So what's occurring? What's concerning and occurring with Russia, and then China's been making moves on Taiwan. We got reports that American warships are now like on the move, like near Taiwan. So we're also positioning in a way to say like, no. This is all concerning because a year ago, I can't even say a year ago now. 2 years ago, the thought of war would be non-existent, and that's because of all the intersecting trade routes. All these countries, including us, we all rely on each other. If you disrupt any of that, the economic backlash that you'll receive will end up doing so much harm to you, because we all become so codependent on our supply chains, and the necessity to work together has mattered more than whatever stupid conflicts we had. And countries like China had all these capitalistic practices, and they really pulled back on, a lot of authoritarian practices have been pulled back a lot. Everything was more democratic. People were working together, treaties, etc. So now, come today, we're in a much different environment. Democracies. Did I say that right? They're dwindling. Okay. Democratic governmental structures are dwindling, and authoritarian governments are on the rise. And even with China, who's becoming very authoritative, who is repealing back. I mean, they took out profits from education. So that's a shot in the foot. They took away Bitcoin mining. That's a shot in the Bitcoin mining. That's a shot in the foot. They're imprisoning some of their best CEOs. I mean, if you imprisoned me for, let's say, the Nobel trading, what do you think happens to Nobel trading? Pretty much dies. I mean, we have the refs, and they're awesome, and they'd probably continue to post stuff in here. But I mean, you can't just take away the guy who runs the company for several months and expect the company to do well. And this is something I keep iterating because people are still wanting to buy the dip on the Chinese stocks. I cannot think of... I have nothing nice to say about that. And just like other hedge fund managers have been saying, like, if you are advocating for people to buy Chinese stocks right now, holy cow, and you're a professional, you're a licensed professional, you should probably lose your job because there is nothing more irresponsible that you could do right now. Just for all the things I reiterated. And as I've previously said, countries actively committing genocide are probably not set up well to have good success in the way that they're going to be run. And I'm actually going to have to... Wait, I have to check my phone real quick. And it's concerning when you see people just ignoring that like it doesn't matter and investing in it because it's like where you're more... Are you not even thinking about it? Are you completely unaware? You need to be aware of these things. And you know, despite the fact that you don't measure the growth of communist countries that exist in communist economies the same way as you do as companies that exist in capitalist economies. Okay, me reading text and talking does not work. Heard on that. So the really concerning thing is that countries that act like that and have authoritarian governments do not care if they have economic backlash over war. And just like China's making all these decisions that have massive economic backlash. While they already like have a crashing real estate market, they're also pursuing all these selfish, you know, self-preservation, as in for the government self-preservation, to as for their control, that is. And it's not for the betterment of the country. It's not for the betterment of the people. It's not for the betterment of anyone that interacts with them. So that's concerning because it's a disconnect from the, you know, the they're trying to branch away from the codependency on other countries, and at the same time everyone else is, because there is these building tensions that could lead to war, and that is 100% black swan event. We do not want to see that. No one's ready for it. Everyone's a mess. Now, will the virus slow them down? Maybe. China is apparently doing lockdowns again. I mean, this reporting, though, it's so divisive from depending on where you get your news. If you're getting it from any mainstream source, you have to question everything they say. I don't care what mainstream news source you follow is. You have to double check it always. I prefer to get all my news resources from journalists that I've done background checks on. Substack is a great site to get great content. YouTube's a great place to get content. This is my favorite medium to put out information and to do like long form discussions where I can really dive into the details of things and my perspective. So yeah, keep that in mind when you're like trying to do research or trying to keep up to date on what's going on. And of course the Discord, you know, I've tried to filter that through my head, use my experience to pass along things that I think are noteworthy in the Discord. And then we also have other members that try to do the same, and there's great content in there. So, you know, the link in the bio or description, and please like and subscribe if you're watching at this point. Hopefully you're getting enough of knowledge out of this to do that, and that helps us a ton and incentivizes me to make more videos, which, by the way, I see that we got a bunch more subscribers, so that's awesome. All right, so more chance for war. If China moves on Taiwan, I see that as a much bigger deal than Russia moving on Ukraine. But Russia moving on Ukraine, if we respond to that, might make China think that they have an opportunity to go after Taiwan. And I can't help but feel like if China makes a fast move on Taiwan, like if that's like and then done, I don't think we'll react. I don't think anyone will react. Sadly, because the huge issue with them taking Taiwan is the semiconductors all come from Taiwan. And there's a pressure for U.S. companies to do production in the U.S. to get around that. But I don't know if the incentives are set up properly to actually get them to do what we want, because I don't know if the current administration is really setting up the proper incentives or even having really the proper allocation of funds to, they wrote out the big infrastructure bill, but you have to keep in mind that money gets spent over a decade, and like who controls how that's spent? No one knows. If Elon Musk was spending $1 trillion to fix our infrastructure, I'd just sit here and go, la, 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 that sounds great. Like I wouldn't have to pay attention at all. But when it's like, I don't know, some unknown government entity that's probably going to write themselves a fat check for doing it, and then a bunch of money will disappear into that project or to this project, or they'll play bias games with who they give contracts to. It's so much more. It's so inefficient compared to letting just the free market like bid for who's the best, and then that person gets the contract. It's like when the government's in charge of everything, doesn't really happen. And sure, when it occurs in the free market unregulated, it's kind of bloody and leads to aggressive business tactics. But you also you also then usually end up with better products and better, more long-term solutions, because people won't have to think ahead if they want to keep their business around. I don't think our government thinks long-term at all. I think they think about the next 4 years it's going to occur so they can get elected. And then they tell you whatever you want to hear so that you'll vote for them. That's rather than the things that actually fix things. And that's why I think we see a huge push for different types of infrastructure that don't actually lead to stability. And again, we've talked about this before. That would be, uranium is the way to go. Nuclear energy has been improving for over a decade. I wrote up like a 3-page research report that's in the Discord. You can track down. It's also on Twitter somewhere. It's like a 12-page or 12-tweet big thing. You might have to dig for that at this point, but I think I posted that. Actually, I first posted that about 8 months ago. No. 7 months ago. And then it got shared on Twitter 2 months ago. So, there's all that. Biden and Japan are trying to affect oil prices right now as well to control that, because they know that it's going to get a little out of control. They're not going to succeed, and it's illegal for them to do that. That won't work at all. Oil prices are probably going to continue to rise, and oil will continue to be a good trade, most likely. The trade is also so crowded. Much like when I think of crowded trades like mobs, where it just becomes so much noise that sometimes it just collapses on itself. And it doesn't, these things, remember, when there's a stock that tracks oil prices or a stock that tracks gold even, they don't track it like, it's not like a mirrored price action for the actual market value of the product, because markets can be chaotic and irrational, and especially when there's so much retail money and stuff. Retail traders do not have they're more it's just it's just the reality of what it is. They're more emotional. They'll dip in and out, cause more wild swings. And then on top of the algos that'll pile up on everything, you could just see dramatic moves out of this. So just be careful about that. Don't be like, oh, for sure it's going to go up because of all energy crisis, because all these international issues. Like, so I'm going to all in. Like, please don't do that. Keep that in mind. That should just be a trade within your portfolio if you want it in your portfolio, if you like trading energy. And also keep in mind, there is money to be made there, most likely, or even in uranium. If you know that research, you know that how that could cause like a huge shortage as well in the future, and that would be really hard to resolve. So, and then if legislation gets changed, which it will most likely be forced to get changed, that could also be a catalyst for those stocks to even get raised higher. And then speaking of legislation changes, I'm still looking at those weed stocks, especially heading into next year. I think they could become a much bigger conversation. as we figure out how to pay for all the things that we just did. Because the tax plans set up right now don't work so at all. Raising income taxes frequently is not effective for, billionaires. So, because so little of what they make it actually comes in as income. So it's all about the terminology used for these things. It affects how they can, and they also use the life insurance products that we list in the Discord to also avoid a lot of the taxes, not just like Roth IRA products, because, obvious reasons. You can read about that in the Discord. So I think that a lot of the fears that the market could crash won't affect us heading into the end of the year. I think on a final Santa rally. Now, granted, there's a lot of pressure for the Federal Reserve to make more aggressive moves on tapering. They were gonna, Biden's even trying to go out and buy up farmland, which is something that you see occur when governments are trying to control food prices. I think it's reasonable to say that the administration is most likely doing that to try and keep the prices low. That could be really concerning. One, because these farmers, I'm from the Midwest. Okay, I know these farmers. I could go talk to them and give them a call. They're crazy, and they're not selling you anything, and they're prepped to wait out for months with any energy crisis or shortages or anything. These we've all seen doomsday preppers, hopefully, or heard of it at least because it's hilarious. But that's your kind of person, all right? They're farmers. They can survive without much contact from the outside world or help from the outside world. They know how to take care of themselves. So this whole strong arming to try and take care of the food prices, that's not going to work in this country. That works in other countries, but we, the Midwest and the South, they're not putting up with it. They're very frustrated and irritated. And regardless of what you think is right or wrong, that's just the reality of what it is. So that's something to keep in mind, because that won't work out. That could cause trouble. That could cause even worse food issues, especially since fertilizer prices are increasing as well. And then any disruption in the supply chain has such a massive ripple effect. It's so hard to even track how that all plays out. I have to utilize so many different resources and piece together the puzzle. So just keep that in mind. Next year could be the start of something that could actually be pretty persistent. So it could be a few years of some really rough times ahead. Now, what also could occur is market freaks out in the realization of how bad things could get, because they're not quite bad yet. And then Fed comes in, prints more money. There's a lot of debate over whether they can print more money. With the dollar as a reserve currency and the dollar mix-like theory, keep that in mind. They probably can continue to just print money. And not only will they probably continue to print money, but the value of the dollar will probably continue to rise. And it will make people's heads spin, because they'll be like, wait, if you print more money, the dollar should go down. Luckily, people have already learned from watching the dollar movement that's not what's going to occur. But you could see the volatility continue to climb as the market goes up, which is interesting. I've been watching this and I've been thinking, and I've even heard some commentary on it. This volatility is climbing as the market kind of melts up. Now, I know, let me not speak too soon, because the market was boring today, so I wasn't glued to stuff. I was doing research. Yeah, we finished today green. Volatility is still relatively high. As far if you're looking back for the past 3 months, it's still relatively high. But market's still climbing. You might think the higher volatility means there's more risk, but I would say it's volatility on the upside is a benefit. It's you make more money. So yeah, we could continue to just see this climb into a final Santa rally. Now, usually there is a little lull that occurs. So I would imagine that we continue to see just kind of a jumpy, frothy market. And then into December, we could see that rally. Now, if December 3rd if memory serves, is going to be a big Fed meeting date. I'll provide extra commentary in the Discord about that. Try to give an extra shout out. Keep an eye out for that, because that's going to be something you want to watch out for. If they, if there's any signs of like wanting to push forward interest rate increases, wanting to be more aggressive on the tapering, the market could easily have like a December 2018 reaction where we see like a flash crash, and then they could go back on it and rewind it, or things. I mean, the conditions that exist in the market right now are much different than where they were previously. So we could actually see them stick with it, and then enter into a bear market heading into next year. Now that is not something that I would necessarily go all in on as a trade, because passive markets melt up, and this will passively melt up unless there's an actual catalyst to send it down. And betting on a catalyst to send it down, especially when the Fed has been so dovish, and so I mean the last tapering we had, it was so mediocre. It doesn't really make much of a difference. I think it would be pretty extreme, and I don't think they have any intentions of picking that pace up. Even if the inflation continues to be a pretty difficult issue, which I mean, I think we come out of all of this just fine in the long term in a few years. Now, hopefully there's no war or something, and we don't have like massive disruptions to all the innovation that we have going on or the progress that we're making. Because I mean, there's so many things that we're going to be offset if there's war. It would, I mean, besides being a terrifying experience, considering how many countries have access to massive weapons of destruction, and on top of that, the technology that exists now. That's some of the scariest thing about the fact that so many democratic governmental structures have fallen apart, is that these authoritative governments now have like advanced AI and stuff to keep track of people. The only way to really like offset that corruption actually is the cryptos. It's like Bitcoin and stuff, and that's why I'm still really heavy on those. Looking at it right now, like Bitcoin's like 57,000, Ethereum's at 4,300. I think that's so strong. I think these are getting ready for a December rally, and I think that if we do enter into a really bearish market, we'll finally see that complete disconnect. Because right now these trend pretty closely with the market. I don't think they should, and I don't think they will continue to will. I mean, these things are growing at twice the rate of the internet. There's no way it will continue to pace with the market, because the market will not continue to grow at twice the pace of the internet, right? So even unless the Fed gets wild with the printer. So that's something to keep in mind. That's what I'm looking for is there. So I'm just, slowly when we got a little bearish there, I bought up some more Bitcoin, because you want to go to the heavier, more established coins in the bear market, and then you want to then spread out to the smaller coins in the bullish market. So that's still the strategy I keep with. I still adjust it. Of course, if you're a contender, you can also see all my holdings and everything. And I actually adjust that monthly though. And then you can see the exact proportions of what I invest in when it comes to the crypto. So that's what's going on macroeconomically. Those are the red flags that I foresee coming up. And then kind of just dabbling in earnings right now. And I've also been giving some extra consideration to a lot of these companies like Wells Fargo. Like one of the reasons I was shorting Snow was because one of their biggest clients is Wells Fargo, and that company helps with international, like a big portion of their business is helping with international payments. Why would you go through Wells Fargo for international payments though if you could just use a cryptocurrency like Cardano or something even, or even just use Litecoin or any of these that have very little fees to move them, very little gas fees to move the money, which are not always called gas fees, but very little fees to move the money to power the blockchain. Why not just do that when it's quicker and cheaper than Wells Fargo? And then then if Wells Fargo is making less, then why would they pay for extra services from a company like Snow? they're going to have to downsize. And that's probably one of the first things that they're like, oh, we got to ditch this, because our whole international portion of the business, the international movement of the money, is what's going to be disrupted by crypto. And I think if next year that gets pushed forward super hardcore, then it could spell all sorts of issues, you know, for PayPal or Square or Snow or, yeah. Could even hurt a lot of the banks, depending on how their allocations are. It's hard to go after banks because they have so many investments, and for each bank, you'd kind of have to like dig through all of them. And the bank stocks may also want to rise in anticipation of rising interest rates. So that's something, and that will also probably continue for these payment companies. So if the market, if the constituents do want to move and to start pushing the Federal Reserve to actually raise interest rates or to be more aggressive on tapering, then 100% I would, after any sort of market correction or something, I will be looking at like a firm, or even go back and take another look at Upstart, or even go to, you know, FAS, which is a leveraged ETF that tracks banking stocks, or even just dig through them, you know, JP Morgan and Bank of America, and yeah, you get the gist. Maybe even, I wouldn't look at Wells Fargo, but I like PayPal if they manage to diversify. We've seen lots of rumors of them like wanting to get Pinterest, or them wanting to start listing stocks. And the stocks had a really great point that I think they could have a nice bounce back. Okay, and then I guess I'll comment on Doximity. Doximity's been a really popular stock in the Discord. They're suffering some pretty wild volatility. And actually, I'm going to take a look at the 20-day real quick. Yeah. Earnings went well. This company's profitable. Great growth. Yeah, bottomed out at 55. Pretty dramatic rebound from the earnings, and then pretty dramatic sell-off afterwards. But this looks like it's bottoming out to me, and I wouldn't be surprised if there's not much more downside from here. I would be surprised if there's a lot more downside from here. I think there's some pretty good upside. The risk-reward and entering a trade there is starting to look a lot better. Excuse me. Yeah, and so I would keep an eye on the bond market. Bond market's been arguing with the Fed the whole time. Actually, I'm going to pull up TLT again. Yeah, we're at 144. Now, this is still relatively high. Granted, it's not in the 150s anymore. But to see it go down, as there's rumors that the Fed might get more aggressive about tapering, is interesting. Yeah, because we could see a very dramatic move out of the bond market right now, and the yield curves look crazy. Like there's definitely anticipation. Well, I mean, it goes back and forth. I think it's all around stimulus. Let me end with this. If you're a new trader, if you've only been doing this for a few years, the Federal Reserve, and politics in general having this much constant impact on the market is unheard of. This is unreal. Like, I shouldn't make claims of what I should or should not have to do this job, but it is unusual for this to have such a massive impact on everything that occurs in the market. Like the market, the Fed minutes drops. It's such a big deal when Powell talks. Everyone's paying attention. Every question matters. Usually, there's not such massive weight of that, and the reason there is because we're running on credit cycles. We're running on money printing. We're running on. I mean, these markets are so inflated, and it's all retail money that's dipping in and out. That's why you get these dramatic moves. Yes, the getting is good, but this game does not go forever. And the longer it goes, the more I'm getting a little concerned that a December 18th continued move or something like that. Now, if a bear market occurs, I'm super confident we're gonna kill it on the bear market. To be honest with you, if there's a really bad bear market, it shakes out the shaft, and then people who aren't legit at this won't do well, and will get way harder, and then heroes can be made, and hopefully that's when I can really prove myself, because when the harder it gets, the few people that will have success. But I'm confident that even if we see like liquidity evaporate, or even if markets go back to more fundamental trading, or even if short-term chasing is no longer a thing, we'll continue to kill it. So check out link in the bio. Please like and subscribe. And this has just been our Spacing Out podcast, where we just space out and talk about stuff. So remember, I'll be doing another episode probably after Thanksgiving. I'll be rolling out some more regular episodes of the No Gloves show, where you can get those nice little bite-sized quick reflections on the day-to-day market. And I'm gonna try to do a No Gloves show once a week too. And also keep in mind that for Thanksgiving, we'll also be doing some pretty big announcements, kind of just changing up how some stuff is done in the Discord. And and then maybe head over to Reddit, check out that post I made, and go join the mob. And what is likely, actually, you know what? Let's just go ahead and torture myself and do some live. Maybe I should even do a separate video for it, but I'm just going to do it now. I'm really curious how this is doing. We got 10 upvotes, 11 upvotes. Note to self, be less dumb. Thanks, benevolent one. That's pretty funny. How is this advice? Only pick companies are great and don't do weekly options. Wow, thanks, Warren. If you have to lose some, make sure you win more on the others than you lost. That's not really the point, right? In order to succeed, you must not fail. 40% of the time, it works every time. These are funny, but it doesn't really make sense, right? Because it's a game of statistics. This comment would be justified if I didn't set the context with people saying that's usually gambling. So obviously I'm saying the remarks I'm saying in response to a certain sort of context. So when you say stuff like that, you completely ignore all the context. Relatively true. You can avoid it. Yeah, whatever, dude. Prolific commenter. I knew Zoom's. Look at previous earnings. I know. Well, that's what I already said. Otherwise, add 2733. Okay. He said relatively true and just repeated everything I said. So I guess he's also relatively true. If you're going to play close to the earnings and are certain of the direction, are willing to play at the money. This guy just said the exact opposite of what you should do. If you're going to play close to the earnings, aren't certain enough on the direction, and aren't willing to pay at the money, you should never pay at the money. Play spread. So play spread, so what? You can lose both ways? Because ViCrush I guess you could sell the high premium into the earnings. But then you're going to be crushed on your... No, that's just a... you want to lose in a more complex way, you could do that. Reduce the impact of... No, it doesn't. You need to go further out of the money to... This guy, wow. This is one of the people that they would call in, and I would just slam my head in the desk. Like, I don't understand how you could say the exact opposite of what you should do. And guys, look, all these comments are just kind of silly because some of these people are like, that wasn't helpful for me. It's like, well, then don't fucking read it, dipshit. Like, continue with your day. Like, if you're good at trading, you don't go through Reddit. I don't read through Reddit because I know what the fuck I'm doing. I don't need any of these dumbasses' help to do it. So, well, that's actually my cue.
Someone is at the front door.
Thanks, Alexa. Hope you found this helpful, guys. Like, comment, subscribe. Appreciate you. Love you. See you on the next episode.